And let's talk about the forbearance first, since that's, it's so important to so many people, and so many people may need to go ahead and try doing a forbearance, right?
Forbearance is basically saying we're going to give you a timeout and a cushion, and in 3 months we can talk again.
Hi, everybody. Welcome to my podcast today. Thanks for joining us. During the pandemic, we're providing many podcast episodes with a variety of topics and some of the very best professionals in their fields so that we can help you during these uncertain times. We're going to get through this. We got to create a plan, a business plan, a personal plan, and then take action. I'm Kristine Stampini. My husband and I own multiple small businesses. In 2017, we opened up our virtual assistant business where we help small business owners hire, train, and staff administrative assistants at a very affordable price. We also have real estate businesses. We're real estate brokers. My husband, Mark, and I have a real estate company. We also have a real estate team, a real estate investment company, and I'm a real estate coach for Craig Proctor. So today I have Emil Fletcher, and he is an attorney specializing in consumer bankruptcy, debt settlement, mortgage modification, and foreclosure litigation. His firm offers a holistic approach to solving your mortgage and debt problems. The Fletcher law philosophy is to listen to the client, understand their circumstances and goals, and help them make the right choices by presenting all options and contingencies. Emil's practice is dedicated to helping fellow South Floridians regain their financial freedom when they have been trapped by overwhelming debt that they have little or no prospect of repaying. So as you and I know, going through this right now, this is very important information. So the laws of Florida and the United States provide us with the rights and protections against, categories in bad debt and bankruptcy and things like that. Today, we're really going to get into forbearance. We're also going to talk about, what we foresee in the future in real estate, and also, are there going to be short sales again and things like that. So I want to welcome my guest, Emil. Welcome.
Hi.
How are you?
I'm good. Happy to be here with you.
Well, thank you for joining us. So why don't you just go ahead and jump right in? First of all, what are you seeing? And let's talk about the forbearance first, since that's, it's so important to so many people, and so many people may need to go ahead and try doing a forbearance, right?
Sure. So to look at it in almost the sense of a timeline, we only know the first steps, right? We know that this started around March, April. We know that forbearance is going to affect, and they're about 3 months long. And everything after that is sort of a big question mark. So looking at it on a timeline sense, around for most people, for their April payments, their car payments, their credit card payments, their mortgage payments, most lenders voluntarily just jumped in and said, we're going to give you 90 days forbearance. Forbearance is basically saying we're going to give you a timeout and a cushion, and in 3 months we can talk again. Well, there's an important distinction between a forbearance and a deferral. A forbearance means in 3 months, you owe us for 3 months, and the 4th month is coming up, so you better have it all or we're going to have a problem. Deferral is putting the loan on the back end to say, basically, we timed out those 3 months. And in July, when the payments start up again, we'll basically pretend like it's the May 1st payment. So that's a really big distinction. And we won't know which lenders are treating the arrearages as forbearance or deferral until we turn that corner in July. And I think that's going to depend on a host of factors. One of them is how many defaults they actually have. If the 3 months come due and July rolls around and they have a sizable number of people that are saying, no, we don't have it yet, I think they're going to be forced into making some decisions about which programs to implement and how. But my guess is if the number is less than they expect or relatively small, they'll just say, you guys figure it out. It's 3 months are up and now you owe us the money. And in that case, for those people that are in that situation, whether it's a lot of people or not a lot of people relatively, they'll have to explore their options. You can either apply for modification. That's typically applied for mortgages. It's not really something that car lenders do. You can decide that you don't want to keep the property anymore and list it for short sale. And that has its own sort of path of discussion to go down. You can try to cure the arrearage with a personal reorganization, a Chapter 13 bankruptcy, which gives you up to 5 years to catch up on the arrearage plus while you're making the regular monthly payments. And that goes for cars or mortgages or any kind of secured debt. So we'll just have to see what options are available come July. Like the 2008 crisis, by 2011 or 12, we had HAMP, half a HARP, and those programs that went into effect that were helpful, whether you wanted to keep the house, sell the house, refinance the house. So my guess is we'll have something like that. They'll probably reach into that playbook and call up a few plays from there and apply them here. Hopefully, they get implemented a lot faster than they did in 2008 because it took them 3 or 4 years to get things going. So that's kind of where we stand now.
So let me ask you that. So as the forbearance, it's going to depend on the bank of which person wants to do a forbearance and who doesn't?
As of right now, yeah, there's no clear-cut rule or law or statute that says that, you bank have to do this, you car lender have to do this, or, there's you landlord, a residential or commercial landlord have to do this. It's really whatever your contract is and whatever business decision the lender wants to make as of right now. That could change.
Really? So I didn't even know that. So they can make it so they can put it either at the end of the loan, or they can make it all due in the 4th month, or they can
and that's the difference again.
Or they can actually even do it where just interest and taxes are due in the 4th month plus the 4th month payment, right?
They can. That would be up to them.
Wow. I didn't know that. I didn't know that. And so you can, first of all, you have to be accepted for it too, right? So you have to apply.
It's pretty automated. For most of my clients that have been doing it for their mortgages and stuff, you just go on the website of the lender, and rather than, paying their employees to answer the same question over and over again and go through the procedure, most of the time you just go on the website. It says, hey, we know why you're here. You're not alone. If you're applying for COVID relief, you want a forbearance, basically check these 3 buttons, enter your account number, and then they get a confirmation email that says, all right, you've been entered into the forbearance program. We'll talk to you again in 90 days. By the way, and then they break it down. This is right now a forbearance. It's not a deferral. And they explain what that is. And they say in 3 months, we'll reconsider you and see what options are available. So that's in pretty much boilerplate for all the forbearances that are being entered into right now.
Wow. So you just go onto the website. You don't even go onto the bank website.
This is, let's say a client has, Wells Fargo mortgage or AmeriHome mortgage or Aqua, whoever it is, they would go on that website. And as far as I've been able to see, they all have something right on the front page that said COVID-19 information. You click on that and it'll sort of, guide you down the list of how to apply it. It's usually within 10 clicks, it's done.
And so is it supposed to affect your credit if you do a forbearance? Do you even know that?
No. So while the forbearance is on, all the notices that I've seen say we will not report this negatively in your credit. If they're voluntarily agreeing to the forbearance, they're not going to report it poorly in your credit. I'm not sure if that's in the CARES Act or not, but I know that's being implemented.
Okay. So I was talking to, who I think you know Mike Huckins, the CPA.
Sure.
Okay. And I was also talking to our lender. So we've had, calls with them as well. We obviously haven't talked about forbearance, but so if they go on to the website, they do the forbearance, they get they're automatically, I guess, accepted, but you don't know what's going to happen. So on month 4, currently we don't, and it's not supposed to report to your credit, okay, during the forbearance, but right. We don't know if it's going to actually, it's going to be due in the 4th month, everything, or if it's going to be put on the end of the loan, or if it's going to be, they're going to make you pay taxes and insurance, and just the 4th month, or if they're going to make it all due in the 4th month. So you have no idea of any of that right now.
Yeah, but being from South Florida, we have I guess, the luxury of experience that, you know, every time we go through a hurricane, we have something like this. We have the hurricane forbearances, like for Irma was the last one that was sort of pertinent here. You know, a lot of people went on a 3-month forbearance, and at the end of 3 months, it was the same thing. They sent a letter that said, you owe us all the money, and here are your options. Either apply for a loan modification, and we'll redo the loan completely, or come due with the money, or we'll escrow the arrearage over, most of them are up to a year. Or, you know, figure something out. You do file a Chapter 13 or do a short sale or sell the house.
Wow. And so I worked with Emil back, you know, in the in when it was the mortgage crisis, right, and financial crisis, and
Sure.
we saw a lot. So that's really how I got started in the business, was helping so many people doing hundreds and hundreds of short sales. Do you foresee that this is going to, do you really see that it's going to go back to where, as far as short sales and such, do you see as many coming up, or what, I mean, what do you foresee as far as short sales?
It's interesting because the facts and circumstances here are different, right? Before it was basically everything was confined to real estate. Essentially, there was, you know, the prices were coming down, people were dropping out, and the properties, you know, were worth less than the people owed on them. And most of the properties that were owned were by normal people who weren't necessarily savvy real estate investors who got spooked at the first sign of trouble and sold. So I don't think it's going to look like that. I think there will be a lot of activity. Again, I think there will be short sales, there will be foreclosures, there will be bankruptcies. I think it's just going to look a lot different. And frankly, I think if I was in that field, I'd be more interested in what's going to happen on the commercial side, because I feel like, you know, retail and commercial space are going to get hit really hard. And I think they're already on the way to having a little instability. Carl Icahn, I think, had a famous short of a lot of commercial real estate, and he was very, very sort of bearish on it. And then this happened. So I think a lot of the activity is going to be in commercial real estate, is my guess.
I agree with you. I agree with you 100%, because people are also seeing that they might not need the commercial space, right? That they're actually, people are more productive at home. And then, you know, so what we have seen is up to 35% of the small businesses may go out of business. Okay. So that obviously affecting, you know, commercial as well, but also as far as the forbearance, because we don't know what's going to be expected, like you said, but because we're in South Florida and we deal with it with the hurricanes, and we've dealt with a lot of other things. It's interesting. But the other thing that I see is, you know, if I am out of a job, and let's say even restaurants, right? So when all restaurants start opening and different businesses start opening, they're going to, and they already are, because different states, I mean, we're at April 22nd today, but different states are starting to open. And when they do, they're not going to allow as many people. And you and I both know, because I think we've talked about the restaurant business, right? Because your in-laws have, you know, near in the Keys. So we know that effect. I mean, it's hard to make money in the restaurant business, right?
It's already a very tough business. This doesn't help. Yeah.
Yeah. And in a lot of businesses, we're just bringing up the restaurant business because you and I both know the restaurant business, but
Sure.
And all these other businesses. So that's going to affect them, which is going to affect people paying their mortgages. And then if the forbearance comes and they say, hey, now, Emil, I want you to pay month 1, 2, 3, and 4, and you're not even back to doing the business like you were. You know, so that's going to affect us, and we're going to say, wow, I have equity in my property, so I'm either going to have to sell it with the equity still in it before I actually, you know, have negative equity. So now I'm going to either have to sell the property because I can't make the mortgage payments, right? And I'm not going to do a foreclosure. I'm not going to let the bank foreclose because I have equity in the property. So don't let it get that far. You've got to talk to professionals like myself and Emil that have been through this many times and know how to maneuver you and let you know your options, right? But also, if you're doing a short sale, that's basically, and it does look a lot different than it did before, right? Because banks were loaning 125% of the equity in the home. So people were already upside down. And then we went through the mortgage crisis and financial crisis where people can pay their mortgages and they were upside down. So, you know, it does look different, but it kind of feels the same in some aspects, right?
Yeah. And, you know, part of that, what we were just talking about with the restaurants, you say, well, you know, we want the restaurateurs and the owners who can't pay the mortgage to talk to someone before things get too bad. But there's another side to that, is the restaurant landlords. So if you have commercial space, you don't think you're in the restaurant business, but you are. If your major tenants are food service and they can't make it, and the client, the tenant wants to sell their business, well, guess what? The lease is part of that business. The location is a big part of any restaurant's business. So that's going to come into play, as well. It's not just the restaurateurs and their employees and people who rely on them, but also those landlords who, if in bulk, a big chunk of the restaurants go out of business at the same time, it's a big problem. And then, if you want to rezone or rebuild out those restaurants and do something else with the building, well, that takes time and that takes money.
Yep. And then the other thing is when you're looking at that and you say, so all these people that could be out of work, because for small businesses, 66% of the jobs are created from small businesses. Okay. So if people are, let's say they're having to get out of their field of business and start, new businesses, but also if you have to refinance your mortgage, okay, or get a loan modification, that could be a problem. Number one, because right now you've missed mortgage payments. So even though you did a forbearance, right now, if you miss a mortgage payment, still, you can't have another mortgage for another 12 months. Okay. So they have not loosened up on that currently, saying, okay, you can do a forbearance and we'll do a loan modification if you can't pay, right, when the forbearance is up. That right now, lenders are not doing that. So they're not saying.
And that's one of those gray areas. Yeah.
And so you got to look at it and know what can you do. So first of all, how about the people that can pay? Should they take advantage of this forbearance and not pay their mortgage?
Well, the risk is low, right? I mean, I don't want to tell people not to pay when they can and they want to, but typically if you're current, any programs that come into effect, when the 3 months are up, if you're current, odds are you're probably not going to be included in that. So, but if you're going to do that, have your war chest set aside. Don't blow that money, because if it's forbearance only and there's no deferral and there's no program, you don't qualify for anything, well, you better pay up then, because otherwise you're going to have a problem, like you said, with your credit and all kinds of things. So you better be ready to do it, in an instant. Having said that, if you're in a situation where you don't have a choice, or it makes a lot more sense for you to not be able to pay it because there's other things you have to pay, yeah, I think at the end of 3 months, there's going to be some form of relief, whether it's modified loans or additional forbearances or redeferrals or grants. There's going to be something. There has to be something. This is too big a problem and too widespread a problem for the government to say, you guys figure this out. Yeah. Because it's going to go poorly.
And what is the CARES? So what is the CARES Act right now? What is it stating?
Basically, it's the law that was passed that is essentially releasing a lot of money. Don't quote me, I can pull it up, but it's in the trillions. I think it was $7 trillion altogether of how to spend money to deal with what's happening here. There's money for hospitals. There's money for small businesses. There's money for cities and municipalities. There's money for the federal government spending. It's just across the board. And it's essentially the government printing up a lot of money to hopefully bridge the gap between now and when things get back to normal.
Back to normal. I don't know if it's ever going to be the same, right?
Well, the new normal, yeah.
New normal, I agree with.
But we're very resilient. I think we'll ultimately be fine. It's just, how is it going to look and how long is it going to take, are the two questions. But will we eventually get back to new normal and be fine and survive and be happy and everything like that and flourish? Yes, I think so. It's how and when.
Like real estate, we talk about it and we say, okay, in real estate, what we think the new normal is going to be is basically some people are going to want to do more virtual, real estate. And what I mean by that is that we actually meet with them instead of face-to-face. We'll actually meet with them like you and I are doing right now, because that's how we're meeting people right now. And instead of go look at all these homes or, go and they were going to do it more virtually until they're ready. So it's just going to look different. Now, do I think that, we're going to thrive still and it's going to be wonderful? Absolutely. It's just going to be, like you said, a new normal, and it's going to make changes. Just like when 911, right? The security at airports changed. It's never gone back. But is that been terrible? No, it's just a new normal. So it's just going to be kind of like all of us are going to figure out what that new normal is, right?
Correct.
So definitely. So what was the HARP? So just people can understand that don't remember. Can you explain what the HARP was a little bit before what we had?
Sure. So HARP was one of the programs that I believe in the tail end of Bush, beginning of Obama era, essentially programs designed for refinancing loans. HAFA was for short sales, and HAMP was for modification. So there were these guidelines and applications and sort of a rule book for how those sort of processes would take place. And part of that was not only what the application would look like, what the documents required would be, what the terms would be. For example, on HAMP, on the modifications, if you got a HAMP modification, the first 5 years was your loan was reset to 2%. And then on the 6th, 7th, and 8th, they would go up to 3%, 4%, and 5% respectively, lock in at 5%. And that was a HAMP modification. Any arrearage you had would probably be rolled back into the loan. And once in a while, they would actually give you principal reduction, where they'd bring some of the principal down to reflect market value. Same thing with HAFA. At one point, there was a guideline that said, if you're doing a short sale, we'll give the seller $10,000 to help relocate them pretty much across the board. And HARP, there were a lot less HARPs, at least in my office, from my experience, there was a lot less HARP activity than for HAFA and HAMP. Because HARP required a decent credit score for refinancing. At that point, you're already in some soup.
So, and I agree with you. So they're going to have to come up, and we don't know, but that's what they did previously, right? 2008 to 11. But like you said, we really started to see the market shift in 2007-ish, right? 7, 8, 9. And it took a while for it to happen, right? So during that time, what happened during that time before this came out?
Chaos. So from 9 to 11, that's sort of when we started with modifications and that sort of thing. No one knew what they were doing. The banks didn't know what they were doing. The attorneys didn't know what they were doing. Everything was a mess. And then little by little, through a series of very expensive lawsuits for the banks and some statutes and rules, it was ironed out. But, we didn't have the luxury of time then. It didn't work out very well because it took a long time to recover. And we have that luxury even less now. I think it's got to move faster.
Right. And I think, though, because of what they learned before, I think it will.
Yeah, I would agree. And the fact that, look, the housing crisis was the housing crisis. It was, if you were in the real estate, if you were in construction, if you were in retail items that sold things for home improvement, they were affected. Doctors weren't necessarily affected, or accountants weren't necessarily affected. This is everything. So, we're all in it together. There's a few businesses that are going to do much better with this, but probably if I had to just throw out a number, I'd say at least 80% of businesses are going to do at least a little worse, if not a lot worse. So it's across the board. So I think, there's going to be a lot more sort of a universal application.
Yeah. And I agree with you 100%. And that's why we didn't see it commercial before. Commercial was not hit before. And it, because it was a financial mortgage crisis, real estate, okay, which is who it affected. And in this, like you said, it affects everybody except for, of course, your Costco, Amazon, your grocery stores. I mean, they're thriving, right? But everybody else, pretty much, it's affecting in some way or another. Some will recover and they'll actually do even better. I personally got into the real estate industry during that time, and I thrived. Yeah. Okay. That's when I entered the real estate world, was through this. When everybody was getting out of real estate, that's when I got in and did really well, and was able to help hundreds and hundreds of people through short sales and modifications and whatever they needed, and letting them know all the different options that they had. So, and it's hard to find those people like yourself and like me who've been through it and kind of know how to maneuver. There's not a ton of us out there that really know what we're talking about through this stuff too. So that's why I love having you on today to really talk about, what options there are. But also, guys, don't just sit there and wait. If you see that you are financially not able to pay your mortgage, you did a forbearance, don't wait until the bank starts a foreclosure process, because when is that going to happen? So when can the bank start foreclosure process if you're not paying your mortgage?
Well, say the forbearances come up in July-ish, August rolls around, September rolls around, and you haven't resolved it. And they're saying, no, I'm sorry, we don't have a program or investors, because, the company you're dealing with the mortgage, but some of the listeners might not, that's not really the decision maker. They're the servicer. That's almost like if you live in an apartment building, you have a manager or a super. That person's just doing the enforcement and collecting the rent and doing all that. But the real decision is made by whoever actually owns the property. So here you have entities, usually trusts or large banks, that own your loan, and they've already behind the scenes said, all right, this is how we're going to modify. This is how we're not going to modify. These are the terms. These are what we'll provide, what we won't provide. So they're just sort of enforcing that. So that's kind of important to keep in mind, because everything's going to be automated and mechanized based on what the investors, sort of asking them to do.
That's right. And, before, when they were doing things, every bank was different. Every servicer, every investor was different. And that could be happening through the forbearance. We don't know if they're guidelines. So one servicer may decide, depending on what happens and what rules they have and what regulations, but different servicers could be doing different things, right? The first thing that you don't want to do, and I can tell you this, if you do need to do a forbearance, absolutely, but don't let it wait, right? Don't reach out to a professional.
But that's super important to bring up. Reach out to a professional, get your ducks in a row, but also don't just say, I'm not going to pay and the banks will be fine with it. That is not the case. If you don't actually activate the forbearance, just like anyone else, any other time, as soon as you're 30 days late, that's going to hit your credit. You really don't want that, especially now. Credit may become very important in the next few months.
Well, and remember what happened, of course you do, before, is somebody might say, okay, I had to go behind on my mortgage. I had to go behind because I was having something go on. And now I call and I say, okay, I can pay this. I didn't pay last month, but now I can now pay this month moving forward. And they say, oh, no. You need to pay last month, this month, late fees, everything else that's out there. You got to catch up. And we say, oh no. And they sent you back your money. Remember that?
Yeah.
They didn't.
Yeah. Once it's accelerated, that's it. So a lot of the banks were playing the game, where you can pay 3 months ago and then in 2 months pay another month. But these days, everything's a little more streamlined, I think. And once they've accelerated the note, which means, look, everything, we want it all now or nothing. That's when you're in the soup. That's when it's a problem.
Right. So what we're trying to say here to help everybody out there is, Emil and I have been through it for sure. Emil more so even, because of the hurricanes, which we haven't had so much here in South Florida. I mean, we were supposed to several times, but have hit other places in Florida. So he's seen stuff like this already been, done even since, since 2011. So, but what we're saying here is, don't wait. So if you're doing the forbearance and then they say, oh, let me, you have to pay all, the 3 months that you missed or whatever it is, and you can't do it, don't just stop paying your mortgage and not talk to somebody, because they're going to start the foreclosure process of your home if you don't reach out. And the bank, if they just escalate it and they say you have to do it and you just wait and you have equity in your home, it's tough, right? So if you want to do a loan modification, you got to make sure you start that pretty quick to see if you are eligible to do it as well. Right?
Yeah. And we can't have this conversation without bringing up HOAs.
Yeah.
That's very, very important. Very important. So the banks haven't filed a single foreclosure, as far as I've been able to see, in weeks. They haven't, the courts have closed foreclosure sales for the months of April, May, but HOAs are pushing right ahead. HOAs are way more aggressive than banks when it comes to foreclosure, and their attorneys are very expensive. It can be a big mess. You don't want to get involved. So make sure that even in certain way, even if you're on a forbearance with the mortgage, keep paying the HOA if you can, because if not, it's going to get very expensive and very ugly very quickly.
I am so glad you brought that up. So what he's saying too here is, I remember when we were doing, short sales and everything else, and the first thing we would always tell people, pay your HOA, your homeowners association. If whatever it is, you've got to pay it. You cannot go behind, because they do start fast and they start the foreclosure, and it is so expensive. Sometimes you could easily get a bill up to 12, 13, 14, 15,000, and they don't stop. They do not stop it. And then even if you're going to do a loan modification, you have to get caught up on the HOA. Okay. So if you don't have that, whatever crazy amount of money they are asking you to pay, then it's not a good thing. Right. And to do a modification, you have to be caught up on your HOA. So do not go behind on your homeowners association today. If you even have to borrow money, whatever you got to do to pay it, make sure that you're paying it. A forbearance is not paying your HOA. Right? How about this? How about this? If I'm doing a forbearance and I still have taxes and insurance that aren't wrapped in my mortgage payment, can I stop paying those?
That's a good question. So the forbearance with the bank is only the forbearance with the bank. Now, if you have the tax insurance escrowed, that's all taken care of. But if you have some kind of payment plan or something where you're paying the insurance or the tax separately, you've got to either keep paying that or keep it in your budget, which at this point, I don't know why anyone would want to not have it escrowed. They're managing it for you for free. I would highly recommend that be the case. But if not, then you have to budget for that, because again, when you're trying to modify, if you're behind on the taxes, or if you don't have the property insured, that can create some serious problems.
Well, and the thing is Emil, there are a lot of investors, and even like ourselves, because we have an investment company, right? So we don't do it that way. We keep our money. And a lot of these investors right now, if they have mortgages and they are not, and people aren't paying them, and they can't pay the mortgage. So this is really, really important. A lot of owner occupied homes will escrow it, but a lot of other people, they don't. They pay it separately. So just make sure that if you're doing a forbearance, it is only with the bank. That is the only thing that you cannot pay, is what you're paying for the bank. Because I think a lot of people are going to think automatically, oh, well, that's my taxes, my insurance, my everything that has to, my HOA, right? And it's not. Wow. So what else are you seeing personally? What have you been talking to people about?
Really, a lot of wait and sees. We've got a lot of calls from people who are in the hospitality industry, or not even just people who work in restaurants or work in hotels and stuff, but people whose business depends on that. We have some clients who create, furniture, custom furniture for hotels. They're, in limbo right now. I have a client who works in sort of gaming items for the cruise ships that have gambling on them, the casinos and the slot machines and stuff. They are completely on ice. They've been furloughed. So a lot of people right now are on wait and see, because they don't know which employers are getting the paycheck protection plan payments. They don't know who's getting a loan. They don't know who's going to do a defer. So I really think this summer is going to be crucial. What happens in July and leading up to July and August, but really I think come July, because that's the 90-day point, that's going to be where the rubber meets the road. Because right now, everything is sort of wishy-washy. We're talking about quarantine. We're talking about health. We're talking about safety. Hopefully these things are sort of done and over. We have a vaccine, or we have sort of a green light to get back to life as normal. That's going to happen. But come July, we don't have a vaccine for the economy. We don't have, anything like that. So we're going to have to come up with some ideas, some plans, some policies, and people are going to have to get ready. You can't just wait for something to happen. You have to talk to, someone who knows what they're talking about, get some good advice, and plan.
That's right. That's right. So thank you so much. So what I want to do is, remember, through all of this, there are people like Emil and I. So if you are, wanting to know options, or having a professional, guide you. On the real estate end, I can totally tell you, because I've been through it. with so many people and help kind of guide you that way. But Emil, for sure, tell them how you can help and how they can get a hold of you and the things that you are doing with people currently.
Sure. So, well, first, our website is fleischerlaw.com. It's my last name in the word law, FLEYSHERLAW. I'm the only Emil Fleischer, I think, in the world, so it should be easy to Google. But what I'm expecting to have the most activity on are Chapter 13 bankruptcies. Chapter 13 is a type of bankruptcy where you basically are creating a personal reorganization. It's not just getting rid of your debts and moving on, which is a Chapter 7. In Chapter 13, you're basically able to force, let's say July, August comes around and the bank's not working with you. Your mortgage is 3 months behind. You don't have the money to put up, or even the association. You fell behind on that association, that sort of thing. Your car payments, whatever it is. In the Chapter 13, you can force all of them into a 5-year payment plan where they have to take that sort of spread while you're making the regular monthly mortgage payments, and a sort of a cherry on top or a byproduct is that any unsecured debt you have, like credit cards, medical bills, collections, those get wiped out. So it gives you a little breathing room. So I expect to see a lot of that. We're probably going to see whatever the programs that they start to implement are for modifications and that sort of thing. We'll be doing that for sure. We'll have to keep our, ear close to the railroad and see what's going on. But those are what I expect to see the most of. There's certainly going to be a lot of activity in real estate. Like I said, I think it's going to be in commercial, and what that's going to look like, I think that's going to be a whole new frontier as to the opportunities that come from that.
Yeah, no, that's great. So basically, everybody, thank you for joining our podcast today. Hopefully you have any questions. The forbearance is questionable still. Things are changing every single day. If you need to do it for sure. But know and stay tuned and stay with professionals and make sure that, if you aren't able to pay after your forbearance is up or whatever, that you're reaching out immediately and not waiting. Make sure that you are staying up if you aren't escrowed in taxes and insurance, that you are paying those, and also your homeowners association, don't stop. Okay. But just know your options, and we're all here for you. Thanks for listening, everybody. And thank you.